smacks you when you least expect it, and that's why they call it the market. Last week, when I was in the media, I was speaking about the potential risk of a sell-off, and that the upside was limited, or any up move would be extremely dangerous. And though if you read my weekly write-ups, I continue to maintain the trend is up with a reversal, and I didn't change it to down simply because there was a risk of a retest of the 17,900 highs that we made last week. Until I think yesterday it looked like it was just possible, and that's where the market just gave up. So I guess that's how it is, and which is why I put out an intraday update today specifying that probably the next large leg down to 14,200 has finally started, or at least that's what it looks like looking across global markets that have everywhere around. I think you've seen an ABC three-wave rally from the lows in May, including in India, and in places like Brazil, Mexico. You've already seen the rising trend line for the ABC rally break on the Sensex. It's at around 17,200. Now, what's really important to note is that finally, after each time that I've tried to call a top since October, we got 5 to 7% sell-offs, but none of them followed to the deeper targets. And then subsequently, we got a rally which made a little higher high than the previous one by a couple of hundreds and 6 points. So we slowly moved up from 17,100 to 500 and then 18,050 since October, making mildly higher highs. But this is the first time in June that we've made a slightly lower high at 17,919 versus 18,050 in April. So we've made our first lower top. Now the thing is, this should be an indication that you're headed for the next lower bottom. And it was really, I almost had alternates in between which I kept writing about, which were indicating the potential of going to 18,300, which means a little higher than 18,050. But however, there was one thing that was telling me it's probably not likely, which is why I maintained wave 2 in my final updates when I actually wrote the Monday Indiacharts update, and which is that the volume kept falling throughout the last 8-9 months of rally, and the lowest point of volume was actually at the high in April. So when you've made the lowest point of volume, it really means that that's the significant point of the market, and which is why I didn't really want to see it crossed. So momentum indicators went into sell on Friday. Still yesterday market attempted once more that whether it would test last week's high, and it failed, and that should mean now that the next larger leg down has started. And this should mean now that we are into wave 3, not just in India but around the world. In fact, it was clearer in global markets like the Dow, the FTSE, like Brazil, that you had a 5-wave decline from April and May through April and May, and that you've done an ABC 3-wave corrective rally, retracing 50 to 60% in most markets. And the third wave down had started in the US a week back, and now I think it looks almost confirmed. In fact, I think it's confirmed that it started in India after today's move, breaking 17,525, which was my short-term key reversal. For those looking for a further confirmation, I think if it breaks the rising trend line from the May low, which is at around 17,200, it would be a complete confirmation that the larger leg down has indeed started. And this one, being wave 3, would include two things. One, since October, I think you've seen distribution in the market. If you had a portfolio one after one, some of the stocks started just selling off while others continued to move up, and so it's been a rotational distribution period. I think in wave 3 you'd probably see almost everything give up and turn to the downside. The ending diagonal pattern in the BSE Midcap Index tells you that this is the final and last leg of the midcap stocks, so there's unlikely to be any potential upsides in the midcaps too. And since it's a global wave 3 down, it's going to be across asset classes, which means gold, silver, even copper, crude. Copper is probably the only one which retraced less than some of the other metals, but I think crude is retraced 60%, silver 78%, and so on. And so most metals have done their potential upsides to start wave 3 of 3 down on the CRB index. So it's going to be an across asset class situation, and it should involve the other thing, which is when you're into wave 3, the fundamental reasons for what is happening become very apparent to almost everybody. And if you been following the news, you finally have people accepting deflation with at the G20 meet, Dr. Manmohan Singh actually using the word that we face a deflationary risk group, mentioning in an entire article about the risk of deflation. And the moment you have that, it's something that people didn't want to talk about earlier, which is now getting accepted. And I think that's what happens in wave 3, is that the fundamental problem gets accepted. And once you have that, I think it will also involve large currency rallies, especially the dollar strengthening against most global currencies, because the maximum debt is outstanding in dollar terms, and the contracting money supply in dollar terms is leading to the strengthening of the dollar, which would be a continued trend where you'll continue to see further strength in the dollar versus almost all currencies. The lagging currencies which turned late, like the Indian rupee, the Brazilian dollar, and also in Canada, Mexico, most of these currencies actually were late starters versus the euro and the pound, which were early starters. The Australian dollar also was a late starter into wave 1 down. So now most of these currencies will enter wave 3 in the next leg down. Some of them have retraced 61% already in this correction, and wave 3 for all of them should start. So it's going to be pretty much spread across, and you'll see a lot of correlation between these asset classes going forward. So be prepared, and if you've taken these cues over time, you've probably exited most portfolios, and we should be looking for significant opportunities on the buy side once the leg down is complete. For those who are on the sell side, probably a significant short side opportunity which is playing out across assets, which means equities, commodities and currencies, and the rupee should be therefore headed to new highs, new all-time highs in the coming months as the wave structures progress. However, like we've seen in some of the other markets like Hong Kong, you are going to get temporary pauses on the way down. It's just that the initial third leg down might be sharp, but after that you might get up to 38% or 50% retracement rallies once in a while, and I'll see if I can actually identify those as and when they show up. But right now I think we're sitting near the top and looking at a good risk reward for the short side for the month of July, or maybe into early or mid-August. So that's how I think markets are going to be looking like. Basically deflationary trends playing out across global markets, and the fundamentals of that getting clearer and more accepted by everyone who's analyzing the markets. So that's all from me for today.